Starknet just broke a 9-month descending trend line, and almost nobody's talking about it. Stark is sitting around 20 cents, with $300 million in assets now securing the network. That's 920 million Stark tokens, plus over 1,200 Bitcoin locked in. The last time we saw this type of technical breakout with retest confirmation was in late 2023, before similar L2 infrastructure plays ran 3 times to 5 times. I'm not saying history repeats exactly, but I am breaking down why this 16 to 26 cent zone could be your accumulation opportunity before a move to 50 cents and beyond. Let's look at what's actually happening here. Stark is currently trading around 20 cents on the weekly time frame, down about 90% from its March 2024 top near $2.60. Over the past 2 weeks, price pushed up to 26 cents before getting rejected. That level matters, and I'll show you why in the technicals. The broader Layer 2 narrative is heating up as Ethereum scaling remains critical for this cycle. Base and Arbitrum are getting attention, but Starknet's positioning itself differently. It's not just another L2, it's becoming Bitcoin's DeFi layer while maintaining Ethereum's security guarantees. Current market sentiment is mixed. Some traders see it as dead money, others see accumulation. The truth is probably in the middle, but there's something in the technicals that changes this picture entirely. Let me connect the dots on what's happening fundamentally, because this isn't your typical number go up narrative. Eli Ben-Sasson, Starknet CEO, just dropped growth metrics that caught my attention. Daily active users increased 9 times year over year, transactions up 5 times, application revenues up 10 times, and transaction fees, the real indicator of network usage, up 14 times. Those are not vanity metrics. That's real adoption acceleration. Starknet is now the 4th largest Layer 2 on Ethereum by total value locked. Think about that positioning. In a market where Base and Arbitrum dominate headlines, Starknet quietly became a top 4 player. But here's what's more interesting. 97% of assets on Starknet are Ethereum L1 native assets, fully secured by Ethereum itself. Compare that to Base at 24%, Arbitrum at 28%, Optimism at 48%. For institutions and serious money, that security profile matters. Now the big catalyst. Starknet just launched BTCFi season with 100 million Stark tokens in incentives. Before you think, oh great, another token emission program, understand what BTCFi actually is. This is not about dumping tokens. It's about bringing Bitcoin as collateral into DeFi ecosystems on Layer 2 infrastructure. The genius here is the incentives bootstrap real economic activity. When you stake Bitcoin on Starknet, you're enabling yield generation through platforms like Akubo for trading fees, Visu for lending interest, and various stablecoin yield strategies. These are sustainable revenue sources, not inflationary token rewards. The Bitcoin staking flywheel they're building creates a virtuous cycle. More Bitcoin flows in, enhancing network security, enabling more low-risk DeFi strategies, attracting more Stark staking, which leads to higher Bitcoin yields. It's designed for long-term value creation, not short-term farming. There's also the quantum computing narrative gaining traction. Starknet was built from day one with quantum-resistant proofs and upgradable wallets. As quantum computing becomes less science fiction and more near-term reality, having infrastructure that's already quantum-resistant is strategic positioning. If you want the complete breakdown of DeFi yield strategies and platform walkthroughs, I've compiled everything in my Ultimate Beginner's Guide to Financial Freedom. It's just $4.99, link in the pinned comment. Development activity tells the adoption story. Recent data shows Starknet with 129% growth in development activity over the past 30 days, ranking 5th among major chains. Builders are showing up. That precedes price action, not the other way around.
Now, let's get into what matters most for timing. I'm analyzing the weekly timeframe because that's where this structure becomes clear. From Starknet's March 2024 top, around $2.60, price carved out a descending trendline for 9 months, grinding lower and making consistent lower highs. That orange dashed line on your screen, that's the resistance that defined this entire downtrend. 2 weeks ago, Stark broke above that trendline decisively. More importantly, it came back down and retested it as support, then bounced. That's textbook technical analysis: break, retest, continuation. This is not a hopium pattern. This is how reversals form. Current price around 20 cents sits above both the 10-week EMA and 21-week EMA. Those blue lines showing short-term momentum is bullish. However, notice that rejection at the 55-week EMA, that purple line around 22 to 23 cents. Price touched it recently and got pushed back down. That's your next key resistance.
We need a weekly close above that 55 EMA to confirm this move has legs beyond a short-term bounce. For support levels, 16 cents is critical. That was previous consolidation resistance from earlier in the year, and it's now flipped to support. Below that, the volume profile point of control sits at 14 cents. That's the price level with the most trading activity historically, so it acts like a magnet if price drops. It would also be strong support because that's where the most hands changed, creating conviction. My Fibonacci retracement is anchored from the 80 cents December 2024 local high down to the 10 cents June and November lows. The 236 Fibonacci level sits exactly at 26 cents. That's where we got rejected last week. It's not random. Traders are watching these levels. The next meaningful resistance is at 36 cents, the 382 Fibonacci level, then 53 cents at the 618 level. Those become logical profit-taking zones. Now, the Fibonacci RSI, this smoothed momentum indicator, is showing overbought conditions, pointing upward. RSI can stay overbought during strong trends, so I'm not immediately bearish on it. However, look at December 2024. Similar RSI reading, similar 55 EMA rejection, and price pulled back for several weeks. I'm not saying that will happen again, but I'm aware of the pattern. That's why risk management matters here. So here's my strategy, and this is what I'm personally doing. Not financial advice, just transparency on my approach. My load zone is 16 cents to 25 cents, using dollar cost averaging. Current price around 20 cents is right in the middle of that range, so I view this as a reasonable entry area. I'm not trying to catch the absolute bottom at 16 cents, because if momentum continues, we might not see it. My stop loss for short-term swing trades is a weekly close below 15 cents. That invalidates the trendline break structure and suggests we need more time to base. Alternative stop loss. If price closes back below that orange descending trendline on a weekly basis, that shows weakness, and I would exit the short-term position. For long-term holders, I still view this as an accumulation zone. Even if we drop to 10 cents, I would reload there rather than panic sell. Take profit targets with scaling. Target 1 is 35 cents, about a 67% gain from current levels. If we hit that, I'm moving my stop loss to break even and locking in risk-free exposure. Target 2 is 50 cents, roughly 142% gain. Here I'm taking 25% off the table and moving stop loss up to target 1. Target 3 at 80 cents represents a 285% gain, scaling another 25% of the position. Target 4 is $1.20, scaling another 25% at a 485% gain. And my moon bag, that final 25%, stays until $2 or higher. Because if this BTCFi narrative plays out and Bitcoin reaches new all-time highs, infrastructure plays like Starknet could see outsized moves. The risk I'm monitoring? That RSI overbought condition could lead to short-term consolidation or a pullback to retest 16 cents. The December parallel makes me cautious about over-leveraging here. I'm positioned but not reckless.
So, my best case scenario. We get a clean break above 26 cents in the next 1 to 2 weeks, reclaim that 55 EMA convincingly, and march toward 50 cents by Q1 2025 as BTCFi adoption gains traction and more Bitcoin flows into the ecosystem. Worst case, we form bearish divergence on the RSI, get rejected again, fall back to 16 cents for another support test, and potentially invalidate below 15 cents if broader market conditions deteriorate. From a probability perspective, I'm looking at this setup with a risk-reward lens. If I enter at 20 cents with a 15-cent stop loss, I'm risking 25% to potentially gain 75% to 150% on the first two targets alone. That's a 3-to-1 or 6-to-1 risk-reward ratio. Those are the setups I look for. What would change my thesis entirely? A weekly close back below the trendline or below 15 cents. Or if the BTCFi narrative fails to gain adoption over the next 30 to 60 days. Fundamentals can shift, and I'm monitoring development activity and on-chain metrics closely. Timeline-wise, I'm thinking short-term is the next few weeks testing 26 cents. Mid-term is 1 to 2 months for a potential move to 50 cents. And long-term, if the macro environment cooperates and Bitcoin hits new highs, 6 months or more for 80 cents and beyond. Starknet is sitting at an inflection point. The technical structure shows a confirmed trendline break after 9 months of downtrend. Fundamentally, you've got $300 million in assets staked, a BTCFi season launch backed by 100 million STRK in incentives, development activity surging 129%, and positioning as the fourth largest Layer 2 with superior Ethereum security guarantees.
Infrastructure plays like this don't move in straight lines. They base, they test, they frustrate traders. But when fundamentals align with technicals the way they're aligning right now, that's when asymmetric opportunities emerge. For me, this is a dollar-cost average zone, not a one-shot all-in entry. I'm managing risk with defined stops and scaling out at targets. If this analysis added value, hit that like button and subscribe so you don't miss the next setup. Turn on notifications because these opportunities don't wait. And join my free Telegram group for faster daily updates. Link is in the pinned comment below. I recently covered other Layer 2 plays and altcoin setups that are showing similar technical structures, so check those out if you want more actionable breakdowns like this. Thanks for watching, and I'll see you in the next one.